Wow. So the last 12 months have been really good to these companies, right? Names like Hut 8 Group moved from as low as $10 to $50. Applied Digital from as low as $3 to $25. CoreWeave had a very volatile year, but nonetheless, they're ending the year double their lows. Iron Energy, I'm sure most of you have heard this one, $5 to $40. Cypher Mining, $1.86 to $15. Its highs were way more. So what happened to these companies, right? Because in the last 5 years, they've had a wild ride. When we look at a company like Hut 8, it was trading as high as $82 in 2021 before it saw a massive correction for the years ahead, and it just finally came back. And the secret sauce that all these companies hold right now is that they're transitioning from being crypto mining companies and they're taking advantage of the data center boom. See, what happened in 2020 to 2021 is that these companies were hoarding Bitcoin and they were mining Bitcoin and they filled up their balance sheets with Bitcoin, which really attracted investors because as the price of crypto increased dramatically during that period, these companies followed because everybody was betting on the boom in Bitcoin. But the problem with mining Bitcoin is that you have now a business that's heavily tied to the performance of cryptocurrencies. And so when crypto crashed in 2021, we saw a big downside move from these companies. And the reason why their moves are so exaggerated is because all of these companies are what are known as high beta companies. So these companies, stocks in specific, move at a much higher degree than the overall market. So think of this. If the market moves 1% higher, a company like Hut 8 can move 3 or 4% higher on that same day just because it has so much volatility that's included in the stock. And so the reason why that is because these are companies that have little to no revenue and they're considered high risk, a high risk stock, which are also along the same tracks of high growth stocks because high risk and high reward kind of go hand in hand, which means that if you bet a little bit, you can win a lot, but then the chances of you winning are very low. And that's what makes them high beta. People are quick to head for the exits as soon as there's any bad news, which is exactly what happened to this company, Hut 8, between 2020-21 and then through 2023 to 2024. But it came back. And the reason it came back is because the company started landing contracts that were promising enough for a possible return. The company signed a 15-year contract for an AI data center, and the contract is worth $7 billion. And so we have to remember, these companies sold off because their business model was not sustainable. It wasn't sustainable to continue mining for Bitcoin or crypto because the volatility of the crypto market is extremely high. And so as these companies were thinking to themselves, okay, we have these buildings, we have the infrastructure, we have access to the power, which is the 80% of the work. How do we transform this into a more steady business? And the way they're doing that is by signing these deals with these AI data centers, and they're building out these campuses over the coming years. Now, these contracts are priced in. So you could see Iren also did the same thing. They signed a $9.7 billion AI cloud contract with Microsoft. Also saw a huge upside move. Applied Digital, $5 billion contract infrastructure with a hyperscaler. But now the focus turns into, can they deliver on these promises? We're already seeing a massive pushback on data center projects because of weather conditions, because of local opposition, because of the bureaucracy behind it, because it takes a while to get approved. Yes, Trump is helping. The Trump presidency is the best thing to happen to AI because they're loosening regulations. They even want to get rid of it at a state level. They want to be in charge of regulating AI. They want to pretty much greenlight all the projects because the US needs to get ahead of China when it comes to AI. We want to become the AI stack around the world, and the way to do that is by greenlighting all these projects very quickly. Now, these companies are trying to take advantage of this However, there are still pushbacks that are taking place, and that is going to be the costly part. So yes, their stocks are trading higher right now, but these companies are still not making money from these contracts. They need to actually build the infrastructure, transform their warehouses into providing AI power. So it's important to note that yes, they have access to the power, they have the buildings, but they do not yet have the capabilities. They have to restructure and build out new internals in their warehouses in order for them to deliver on their promises for these multi-billion-dollar contracts. And so in the next 12 months, these stocks are actually likely to underperform. That's because a lot of their projects are not set to launch until late 2026 and 2027. So you as an investor, for the next 12 months, you need to be watching for their progress on these projects because they're already priced in. This is a company trading 500% higher than its lows. This is a company that's trading more than 1,000% higher than its lows. This is a company trading double its lows. So these are already priced in projects. All these contracts that they landed in 2025 were sweet, and yes, they were worth billions of dollars, but that's billions of dollars divided by 15 years. These are long-term contracts, and they need a lot of them in order for them to continue succeeding and to continue keeping investor attention. So don't get comfortable. A company like Hut 8 is only making $150 million a year, which is not much. A company like Applied Digital is only making $145 million a year. So it's still not much. Yes, it increased that dramatically in 2025, but still not enough for us to say this is a safe buy and hold and forget about it investment. These are all stocks that you must continue watching closely. You want to watch for one, more contracts, revenue growth, and you want to see them lower their losses. These are extremely high losses, which is okay for a company that's young and it's in building stages, but you also want to see a pathway to profitability eventually. Next, we want to kind of highlight the fact that now that we know that these companies are spending billions of dollars building out this infrastructure, who is going to benefit? So these companies already benefited. They're already landing the contracts, and we already know that they're for the next 5 to 15 years, they have they have predictable revenue models that are coming their way from big names like Microsoft and other names that they've signed contracts with. But there are other names to consider that will benefit while these guys are building that infrastructure. You have a name like Iren, for example. This is a company that's focused on power and electrical equipment. This is a name that can benefit as these companies spend on electric and power equipment. Another name for cooling is Vertiv. So I believe VRT, this is a company we've already seen benefit, but going into the next 12 months, as more AI data centers pop up, this is another name that can power because AI-specific cooling, which uses liquid cooling, is required, and a name like Vertiv is there to deliver on this. Other names that may benefit is going to be a name like Floor Corp, which focuses on construction, GPUs, of course, names like NVIDIA. These companies are going to be buying GPUs. A name like Iren or Iris Energy and a name like CoreWeave is also going to benefit from a name like this. They're buying GPUs and racks, and they're powering these GPUs and selling that cloud access to other companies. And so 2026 is going to be might be a rough year for names like Hut 8, Applied Digital, CoreWeave, Iren, and Cypher because they're still in their building stages. We already highlighted the fact that there are data center projects that are blocked, and so their progress going forward is going to be focused on one, landing new contracts, two, building out these infrastructure projects. The faster they deliver, the more likely they can win contracts from hyperscalers. So it's a racing game from this point forward to who can deliver on that power the fastest.